Question 1. Market research demonstrates a significant increase in demand for sustainable construction materials. Grupo ACS is considering expanding its offerings in this area. Which of the following approaches best represents a prudent and professional method for evaluating this potential expansion? Option A. Conduct a comprehensive feasibility study, including market analysis, competitor assessment, financial projections, and risk evaluation, for committing significant capital or operational resources. Option B. Pursue every single identified niche within the sustainable materials market simultaneously, without prioritizing or conducting in-depth analysis on any single opportunity. Option C. Focus only on developing sustainable materials that require minimal upfront investment and effort, even if they do not represent the most impactful or strategically aligned opportunities. Option D. Immediately allocate a substantial portion of the R&D budget and sales team resources to develop and market a new line of sustainable materials, assuming the market trend will guarantee success. Correct answer is A. Conduct a comprehensive feasibility study, including market analysis, competitor assessment, financial projections, and risk evaluation, before committing significant capital or operational resources. Explanation. Scenario analysis. This scenario presents a common challenge in project management and business development, balancing the pursuit of new opportunities with the efficient allocation of existing resources. The professional challenge lies in making a strategic decision that maximizes long-term value while adhering to ethical principles and regulatory compliance, particularly concerning the responsible use of company time and resources. The need for careful judgment arises from the potential for both significant reward and wasted effort, impacting team morale, financial performance, and reputational standing. Correct approach analysis. The correct approach, which involves a structured and phased evaluation of potential market opportunities, represents best professional practice. This method aligns with principles of sound business strategy and responsible resource management. It prioritizes due diligence, risk assessment, and a data-driven decision-making process. By conducting initial, low-cost research and analysis before committing significant resources, the company avoids speculative investments and ensures that any subsequent investment is well justified and aligned with strategic objectives. This phased approach is implicitly supported by general business ethics and good governance principles, which advocate for prudence and accountability in financial and operational decisions. While specific regulations might not dictate this exact process, it embodies the spirit of responsible corporate conduct expected under general business law and ethical frameworks. Incorrect approach is analysis. Pursuing every identified market opportunity without prior assessment represents a failure in strategic planning and resource management. This approach is professionally unacceptable as it leads to a dissipation of resources, potential overextension of the team, and a low probability of success due to a lack of focused effort. Ethically, it can be seen as a misuse of company time and funds on speculative ventures without a clear business case. Committing substantial resources to a single, unvetted opportunity based on initial enthusiasm or anecdotal evidence is also professionally unsound. This demonstrates a lack of due diligence and a disregard for risk assessment. It violates the principle of making informed decisions and can lead to significant financial losses and reputational damage if the opportunity proves unviable. This approach can be considered negligent in its failure to adequately investigate before committing. Focusing solely on opportunities that require minimal effort, regardless of their strategic fit or potential return, is a short-sighted approach. While it conserves immediate resources, it risks missing out on high-value opportunities that require a more significant initial investment of time and analysis. This can lead to stagnation and a failure to achieve long-term growth objectives, which is a dereliction of professional duty to maximize shareholder value and ensure the company's sustained success. Professional reasoning. Professionals should adopt a systematic, phased approach to evaluating new market opportunities. This involves 1. Initial screening, conducting preliminary research to assess basic viability and strategic alignment. 2. Detailed analysis. For promising opportunities, undertaking in-depth market research, competitive analysis, and financial modeling. 3. Pilot program/prototyping, testing the concept on a smaller scale to gather real-world data and refine the offering. 4. Full-scale implementation, committing significant resources only after successful validation at earlier stages. This process ensures that decisions are data-driven, risks are managed, and resources are allocated effectively, aligning with ethical obligations for responsible business conduct and good governance. Question 2. Governance review demonstrates a potential control weakness in the procurement process for a specific project, where a key approval step was inadvertently overlooked for a minor but critical component. The project team is concerned about potential delays if a formal reapproval process is initiated. Which of the following actions best represents a compliant and professionally sound response? Option A. Inform the project sponsor of the oversight and request an informal verbal confirmation to proceed to avoid project delays. Option B. Retroactively amend the procurement documentation to reflect the approval as if it had occurred, to maintain the appearance of full compliance. Option C. Immediately implement a compensating control for future similar transactions and document the deviation and the compensating control for review by internal audit. Option D. Proceed with the project as planned, assuming the oversight was a one-off occurrence with no significant risk, and address it only if a future issue arises. The correct answer is C. Immediately implement a compensating control for future similar transactions and document the deviation and the compensating control for review by internal audit. Explanation. This scenario presents a professional challenge because it requires balancing the need for robust internal controls and compliance with the practical realities of project execution and stakeholder expectations. The challenge lies in identifying the most effective and compliant method for addressing a potential control weakness without causing undue disruption or appearing to circumvent established procedures. Careful judgment is required to select an approach that is both procedurally sound and strategically beneficial. The correct approach represents best professional practice because it prioritizes a systematic and documented process for addressing identified control deficiencies. This aligns with the principles of good governance and internal control frameworks, which emphasize proactive identification, assessment, and remediation of risks. By initiating a formal review and proposing a documented control enhancement, the individual demonstrates adherence to established compliance protocols and a commitment to strengthening the organization's control environment. This proactive stance is crucial for maintaining regulatory compliance and mitigating future risks. An incorrect approach that involves bypassing formal channels or implementing an informal solution would represent a significant regulatory and ethical failure. Such an approach undermines the integrity of the internal control system, potentially leading to non-compliance with relevant regulations and internal policies. Creates a risk of inconsistent application of controls, making it difficult to audit and verify compliance. Ethically, it demonstrates a lack of commitment to transparency and accountability, which are fundamental to professional conduct. Another incorrect approach, such as ignoring the identified weakness due to perceived minor impact, would also be a failure. This demonstrates a lack of due diligence and a disregard for the potential for even minor control gaps to be exploited or to escalate into more significant issues. It fails to uphold the professional responsibility to identify and address risks, potentially exposing the organization to reputational damage and regulatory scrutiny. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the identified weakness and its potential impact. 2. Consult relevant internal policies, procedures, and regulatory requirements. 3. Evaluate potential remediation strategies, considering their effectiveness, feasibility, and compliance implications. 4. Seek appropriate internal approvals and engage relevant stakeholders. 5. Document the chosen approach and its implementation. 6. Monitor the effectiveness of the implemented control. Question 3. Governance review demonstrates that a new company-wide remote work policy is being considered. Which approach to assessing the potential impact of this policy best aligns with robust organizational governance and risk management principles? Option A. Conduct a comprehensive, multi-stakeholder impact assessment considering financial, operational, human resources, and legal implications, utilizing both quantitative data and qualitative feedback. Option B. Assign the entire impact assessment responsibility to the IT department, as they will manage the technical infrastructure for remote work. Option C. Rely primarily on informal discussions with a few department heads to gauge their initial reactions and perceived challenges. Option D. Initiate an exhaustive, granular quantitative analysis of every potential minute impact. Regardless of its significance, to ensure absolute certainty. The correct answer is A. Conduct a comprehensive multi-stakeholder impact assessment considering financial, operational, human resources, and legal implications, utilizing both quantitative data and qualitative feedback. Explanation. Scenario analysis. This scenario presents a common challenge in large organizations where the impact of a new policy needs to be assessed across various departments. Difficulty lies in ensuring that the assessment is comprehensive, objective, and aligns with the organization's strategic goals and regulatory obligations, without being overly burdensome or leading to analysis paralysis. The pressure to implement changes quickly can sometimes lead to superficial assessments, which is professionally challenging as it risks overlooking critical unintended consequences. Correct approach analysis. The correct approach involves a structured, multi-stakeholder impact assessment that considers both quantitative and qualitative factors. This aligns with best practices in governance and risk management, which are implicitly expected in a hiring assessment for a firm like Grupo ACS. A thorough assessment ensures that potential risks, resource implications, and benefits are identified and understood before implementation. This proactive approach minimizes the likelihood of negative outcomes and supports informed decision-making, which is a cornerstone of responsible corporate governance and adherence to any relevant industry standards or internal policies that would govern such a process. Incorrect approaches analysis. One incorrect approach would be to rely solely on anecdotal evidence or the opinions of a few senior managers. This fails to provide a robust, data-driven understanding of the policy's impact and can lead to biased conclusions. It bypasses the due diligence required for effective governance and could violate internal policies mandating comprehensive impact analysis. Another incorrect approach is to conduct a highly detailed, quantitative analysis of every conceivable minor impact, leading to significant delays and resource expenditure without a proportional increase in understanding or actionable insight. This demonstrates a misunderstanding of proportionality in impact assessment and can hinder the organization's agility, potentially contravening principles of efficient resource allocation and strategic execution. A third incorrect approach is to delegate the entire impact assessment to a single department without cross-functional consultation. This risks a narrow perspective, overlooking impacts on other areas of the business, and potentially leading to unforeseen conflicts or inefficiencies. It represents a failure in collaborative governance and risk management, as it does not ensure a holistic view of the policy's ramifications. Professional reasoning. Professionals should approach impact assessments by first defining the scope and objectives clearly. They should then identify all relevant stakeholders and gather input through a combination of methods, including data analysis, surveys, and interviews. The assessment should consider various types of impacts: financial, operational, human resources, legal, reputational, and evaluate them against predefined criteria. Finally, findings should be documented, communicated, and used to inform the decision-making process regarding policy implementation, modification, or rejection. This structured, inclusive, and objective process ensures that decisions are well-informed and aligned with organizational objectives and responsibilities. Question 4. The control framework reveals that a critical project faces a potential delay due to the standard procurement process for a specialized component. The project manager is aware of a vendor who can supply the component much faster, but this vendor is not on the approved supplier list, and the expedited procurement process is not explicitly covered by existing policy for this specific situation. The project manager is considering authorizing the purchase directly from this vendor to meet the project deadline. Option A. Proceed with the purchase from the faster vendor without formal documentation or consultation, relying on the urgency of the project as justification. Option B. Authorize the purchase from the faster vendor immediately to avoid project delays, assuming the cost is reasonable and the component meets technical specifications. Option C. Inform the vendor that the company cannot deviate from its standard procurement procedures and explore if the vendor can meet the standard timeline, or seek alternative approved vendors. Option D. Initiate a formal review of the procurement policy's provisions for exceptional circumstances and consult with the legal and compliance departments to determine if an exception can be formally justified and approved, or if an alternative compliant procurement route exists. The correct answer is D. Initiate a formal review of the procurement policy's provisions for exceptional circumstances and consult with the legal and compliance departments to determine if an exception can be formally justified and approved, or if an alternative compliant procurement route exists. Explanation. The control framework reveals a potential conflict between the need for timely project execution and the adherence to established procurement policies. This scenario is professionally challenging because it requires balancing competing priorities, delivering a critical infrastructure project on schedule, which is vital for Grupo ACS's reputation and financial performance, against the imperative to maintain robust internal controls and comply with procurement regulations designed to ensure fairness, transparency, and value for money. Misjudging this balance can lead to significant risks, including regulatory sanctions, reputational damage, and financial impropriety. The correct approach, which involves a thorough review of the procurement policy's exceptions and consultation with the legal and compliance departments, represents best professional practice. This is because it prioritizes adherence to the established regulatory framework governing procurement. By seeking clarification on policy exceptions and involving relevant internal expertise, the project team demonstrates a commitment to due diligence and responsible governance. This proactive engagement ensures that any deviation from standard procedures is properly documented, justified, and approved, thereby mitigating legal and ethical risks. It upholds the principles of good corporate governance and regulatory compliance, which are paramount in the construction and infrastructure sector. An incorrect approach that bypasses established policy for expediency is professionally unacceptable due to specific regulatory and ethical failures. Firstly, it violates the principle of procedural fairness inherent in procurement regulations, potentially leading to accusations of favoritism or corruption. Secondly, it undermines the integrity of the control framework, creating a precedent for future noncompliance and weakening the organization's overall risk management posture. Ethically, it demonstrates a lack of integrity and a disregard for the principles of transparency and accountability that are expected of a reputable organization like Grupo ACS. Another incorrect approach, which is to proceed with the vendor without any formal justification or documentation, represents a significant failure to comply with internal controls and potentially external regulations. This lack of documentation makes it impossible to demonstrate adherence to procurement policies or to justify the selection of a particular vendor, leaving the organization vulnerable to audits and investigations. It also fails to uphold the ethical obligation to act with due diligence and to ensure that public funds or company resources are used efficiently and effectively. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the core requirement and the perceived obstacle. 2. Identify the relevant internal policies and external regulations. 3. Assess the potential risks associated with different courses of action. 4. Consult with relevant stakeholders, including legal, compliance, and subject matter experts. 5. Document all decisions, justification, and approvals meticulously. 6. Prioritize compliance and ethical conduct, even when it presents challenges to project timelines. Question 5. The monitoring system demonstrates an unusual pattern of access to client financial records by an unauthorized internal user. What is the most appropriate immediate course of action to address this potential data breach, ensuring compliance with the Grupo ACS hiring assessment tests regulatory framework? Option A. Immediately initiate a comprehensive internal forensic investigation to determine the full extent of the breach before notifying any external parties or affected clients. Option B. Inform the IT department to revoke the user's access and monitor their activity without further immediate action, pending a full review of the system logs. Option C. Contact the affected clients directly to inform them of the potential breach and advise them to change their passwords, without initiating an internal investigation first. Option D. Secure the affected systems, commence an immediate internal investigation, and simultaneously prepare for prompt notification to affected clients and relevant regulatory authorities as per established protocols. Correct answer is A. Immediately initiate a comprehensive internal forensic investigation to determine the full extent of the breach before notifying any external parties or affected clients. Explanation. The monitoring system demonstrates a potential breach in data privacy protocols, specifically concerning the handling of sensitive client information. This scenario is professionally challenging because it requires immediate and decisive action to mitigate potential harm to clients and the firm, while also adhering to strict regulatory requirements. The challenge lies in balancing the need for swift remediation with the imperative to conduct a thorough and compliant investigation. The correct approach involves a multifaceted response that prioritizes client notification and regulatory reporting, in accordance with the Grupo ACS hiring assessment tests specified regulatory framework. This includes immediate internal investigation to understand the scope and nature of the breach, followed by prompt and transparent communication with affected clients. Crucially, it necessitates adherence to any mandatory reporting timelines and procedures outlined by the relevant regulatory bodies. This approach represents best professional practice because it aligns with the ethical duty of care owed to clients and fulfills legal obligations to report data breaches. Transparency and prompt action build trust and minimize reputational damage. An incorrect approach would be to delay notification to clients or regulatory bodies while conducting an exhaustive internal investigation without any interim communication. This failure to act promptly could violate regulations requiring timely reporting of data breaches, potentially leading to significant fines and sanctions. It also demonstrates a lack of ethical consideration for client rights and their ability to take protective measures. Another incorrect approach would be to attempt to conceal or downplay the breach internally without proper escalation or external reporting. This constitutes a severe ethical and regulatory failure, undermining the principles of accountability and transparency fundamental to financial services. Such actions could lead to severe disciplinary measures, including professional disqualification. Professionals should employ a decision-making framework that begins with immediate containment of the breach, followed by a rapid assessment of its impact. This assessment should inform the decision-making process regarding notification and reporting, always erring on the side of caution and transparency. Consulting with legal and compliance departments is paramount to ensure all actions are fully compliant with the applicable regulatory framework. The process should be documented meticulously at every stage. Question 6. Governance review demonstrates that a critical project is facing significant delays due to the implementation of a new software module that requires changes to existing data handling protocols. The project team believes they have identified a more efficient, albeit undocumented, method for data migration that could expedite the process, but it deviates from the established standard operating procedures. The team is unsure if this alternative method complies with the relevant data protection and financial reporting regulations. What is the most appropriate course of action for the project team? Option A. Proceed with the undocumented data migration method to meet the project deadline and inform the compliance department of the changes after the module is live. Option B. Implement the proposed data migration method without consulting compliance, assuming that the efficiency gains inherently imply regulatory adherence. Option C. Halt the project indefinitely until a full, in-depth review of all data handling protocols can be completed by an external audit firm. Option D. Immediately consult with the compliance department to discuss the proposed data migration method, seek clarification on regulatory requirements, and jointly assess the risks and benefits of the alternative approach. The correct answer is D. Immediately consult with the compliance department to discuss the proposed data migration method, seek clarification on regulatory requirements, and jointly assess the risks and benefits of the alternative approach. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for efficient project execution with the imperative of robust governance and compliance. The pressure to meet tight deadlines can tempt teams to bypass established procedures, leading to potential risks. The professional challenge lies in identifying and mitigating these risks without unduly hindering progress, requiring a nuanced understanding of the regulatory framework and its practical implications. Correct approach analysis. The correct approach involves a proactive and collaborative engagement with the compliance department. This demonstrates an understanding that regulatory adherence is not an impediment, but an integral part of successful project delivery. By seeking clarification and guidance early, the project team ensures that any deviations or proposed shortcuts are assessed against the relevant regulations and internal policies. This approach fosters a culture of compliance, minimizes the risk of retrospective issues, and ultimately protects the organization from potential penalties or reputational damage. It aligns with the principle of embedding compliance into the project lifecycle, rather than treating it as an afterthought. Incorrect approach is analysis. One incorrect approach involves proceeding with the proposed changes without formal consultation. This bypasses the established governance framework and risks violating specific regulatory requirements or internal policies designed to ensure data integrity, security, or financial accuracy. Such an action could lead to noncompliance, requiring costly remediation and potentially incurring fines. Another incorrect approach is to delay the project indefinitely while awaiting a comprehensive review. While caution is important, an indefinite delay without a clear plan for resolution is inefficient and can negatively impact business objectives. It fails to acknowledge that many regulatory requirements can be addressed through risk-based assessments and pragmatic solutions, rather than requiring a complete standstill. This approach can also signal a lack of understanding of the business's operational needs and the importance of timely delivery. A further incorrect approach is to implement the changes and then inform the compliance department retrospectively. This is a reactive and high-risk strategy. It assumes that the changes will be compliant, which is not guaranteed, and places the compliance department in a difficult position of having to approve or reject changes that have already been made. This can lead to significant disruption, the need for rework, and a perception of a lack of accountability within the project team. It undermines the principle of proactive risk management and can damage trust between departments. Professional reasoning. Professionals should adopt a proactive and collaborative approach to governance and compliance. When faced with implementation challenges that touch upon regulatory frameworks, the decision-making process should involve 1. Identifying the specific regulatory requirements potentially impacted by the proposed action. 2. Consulting with the relevant compliance or legal departments to understand their interpretation and any specific guidelines. 3. Assessing the risks associated with different courses of action, considering both operational efficiency and regulatory adherence. 4. Documenting all decisions and justifications, especially when deviating from standard procedures. 5. Prioritizing solutions that achieve project objectives while maintaining compliance. Question 7. Assessment of the most appropriate strategy for integrating sustainability performance data into Grupo ACS's formal financial reporting processes, considering evolving regulatory expectations and the need for data reliability. Option A. Delegate the entire responsibility for sustainability reporting integration to external consultants with minimal internal oversight of the process and data. Option B. Implement a phased approach, establishing clear internal controls and validation procedures for sustainability data before integrating it into financial disclosures, prioritizing accuracy and verifiability. Option C. Exclude all sustainability-related information from financial reports to maintain focus solely on traditional financial metrics, assuming no immediate regulatory mandate for integration. Option D. Immediately incorporate all readily available sustainability metrics into financial reports to demonstrate proactive ESG engagement, without extensive pre-validation. Correct answer is B. Implement a phased approach, establishing clear internal controls and validation procedures for sustainability data before integrating it into financial disclosures, prioritizing accuracy and verifiability. Explanation. The scenario presents a challenge in implementing a new internal control framework within Grupo ACS, specifically concerning the integration of sustainability reporting into financial disclosures. The professional challenge lies in balancing the need for accurate and timely financial reporting with the evolving regulatory landscape and stakeholder expectations regarding environmental, social, and governance-esque factors. This requires careful judgment to ensure that sustainability information, when integrated, is reliable, verifiable, and does not obscure or misrepresent the core financial position of the company. The complexity arises from the potential for differing interpretations of ESG metrics, the lack of universally standardized reporting frameworks for all sustainability aspects, and the risk of greenwashing if not handled with integrity. The correct approach represents best professional practice because it prioritizes a phased, risk-based integration of sustainability data, ensuring that only information that meets established internal control standards for reliability and verifiability is included in formal financial disclosures. This aligns with the principles of robust financial reporting, which demand accuracy and transparency. By establishing clear internal policies and procedures for data collection, validation, and reporting of ESG metrics, Grupo ACS demonstrates a commitment to both regulatory compliance and stakeholder trust. This methodical approach minimizes the risk of misstatement and ensures that any integrated sustainability information is supported by a strong control environment, thereby enhancing the credibility of the overall financial report. This is consistent with the general principles of good corporate governance and financial stewardship expected of entities operating within regulated environments. An incorrect approach that involves immediately integrating all available sustainability data without rigorous validation processes would represent a significant regulatory and ethical failure. This could lead to the inclusion of inaccurate, incomplete, or misleading information in financial reports, potentially violating disclosure requirements and misleading investors. Such an approach risks greenwashing, where sustainability claims are exaggerated or unsubstantiated, eroding stakeholder trust and potentially attracting regulatory scrutiny. Another incorrect approach, which is to exclude all sustainability-related information from financial disclosures regardless of its materiality or regulatory relevance, would also be professionally unacceptable. This failure to acknowledge and report on material ESG factors, especially as regulations evolve to mandate such disclosures, could be seen as a lack of transparency and a disregard for emerging reporting standards, potentially leading to non-compliance and reputational damage. A third incorrect approach, relying solely on external consultants to define and implement sustainability reporting without adequate internal oversight and integration into existing financial control systems, would also be flawed. This approach outsources critical control responsibilities and risks creating a disconnect between sustainability efforts and the core financial reporting process, potentially leading to inconsistent application and a lack of accountability. The professional decision-making process for similar situations should involve a thorough understanding of the applicable regulatory framework, including any specific guidance on sustainability reporting or integrated disclosures. This should be followed by a comprehensive risk assessment to identify potential challenges and areas of concern, developing clear internal policies and procedures, establishing robust data validation mechanisms, and ensuring adequate training for relevant personnel are crucial steps. Furthermore, maintaining open communication with stakeholders and seeking expert advice when necessary, while retaining ultimate responsibility for the integrity of financial reporting, are essential components of sound professional judgment. Question 8. Comparative studies suggest that the implementation of new regulatory frameworks within large, diversified organizations can be significantly impacted by the chosen rollout strategy. Considering the principles of effective compliance and risk management, which of the following implementation approaches is most likely to achieve sustainable adherence to new regulations while minimizing operational disruption? Option A. A phased rollout, prioritizing high-risk business units and functions for initial implementation and training, followed by broader deployment based on lessons learned. Option B. A rapid, top-down deployment of the new framework across all departments simultaneously, with an emphasis on speed over comprehensive understanding and integration. Option C. Immediate, mandatory, company-wide training on all aspects of the new framework for all employees, regardless of their specific roles or exposure to regulated activities. Option D. Delegation of the entire implementation process to the legal department, with minimal consultation with operational or business unit leaders. The correct answer is A. A phased rollout, prioritizing high-risk business units and functions for initial implementation and training, followed by broader deployment based on lessons learned. Explanation. This scenario presents a professional challenge rooted in the implementation of a new compliance framework within a large, complex organization like Grupo ACS. The challenge lies in balancing the need for robust adherence to regulatory requirements with the practicalities of operational integration and employee adoption. Effective implementation requires not just understanding the letter of the law, but also its spirit, ensuring that the new framework genuinely enhances risk management and ethical conduct without unduly hindering business operations. Careful judgment is required to select an implementation strategy that is both compliant and sustainable. The correct approach represents best professional practice because it prioritizes a phased, risk-based rollout. This strategy acknowledges that not all areas of the business carry the same level of regulatory risk. By focusing initial efforts on high-risk areas, the organization can ensure that the most critical compliance requirements are met effectively and efficiently. This approach is ethically sound, as it demonstrates a commitment to proactive risk mitigation and responsible corporate governance. It aligns with the principles of proportionality and effectiveness often embedded in regulatory frameworks, ensuring resources are allocated where they are most needed. Furthermore, a phased approach allows for iterative learning and refinement of the implementation process, leading to a more robust and adaptable compliance program. An incorrect approach that focuses solely on immediate, company-wide mandatory training without a prior risk assessment is professionally unacceptable. This fails to acknowledge the varying risk profiles across different business units and could lead to inefficient allocation of resources and employee fatigue, potentially diminishing the effectiveness of the training. It may also be seen as a superficial attempt at compliance rather than a genuine commitment to embedding a culture of compliance. Another incorrect approach, which involves delegating the entire implementation to a single department without cross-functional input, is also professionally flawed. This can lead to a disconnect between the compliance framework and the operational realities of other departments, resulting in a framework that is difficult to implement or enforce. It neglects the ethical responsibility to ensure that all relevant stakeholders are involved in shaping policies that affect their work, fostering a sense of ownership and buy-in. A third incorrect approach, prioritizing speed of implementation over thoroughness and employee understanding, is ethically problematic. This suggests a focus on ticking boxes rather than achieving genuine compliance and fostering an ethical culture. It risks creating a compliance program that is technically in place but not truly understood or embraced by employees, leaving the organization vulnerable to future breaches. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the regulatory landscape and the organization's specific risk profile. This involves conducting thorough risk assessments, engaging with key stakeholders across all relevant departments, and developing a phased implementation plan that prioritizes high-risk areas. Continuous monitoring, feedback mechanisms, and adaptive strategies are crucial for ensuring the long-term effectiveness and sustainability of any compliance initiative. The goal is to integrate compliance seamlessly into the organization's culture and operations, rather than treating it as a separate, burdensome task. Question 9. The monitoring system demonstrates a pattern of flagging certain transaction types for potential policy breaches, but these alerts are often dismissed due to their perceived low volume. What is the most appropriate next step for the compliance team? Option A. Increase the threshold for alerts to reduce the number of notifications, assuming the low volume indicates a minor issue. Option B. Rely on the system's current output and focus resources on other, higher volume alerts, as the low volume suggests minimal risk. Option C. Temporarily disable the monitoring for these specific transaction types until a more comprehensive review can be scheduled. Option D. Conduct a thorough investigation into why these specific transaction types are being flagged, regardless of volume, to understand the underlying risk and ensure the monitoring system is calibrated correctly. The correct answer is D. Conduct a thorough investigation into why these specific transaction types are being flagged, regardless of volume, to understand the underlying risk and ensure the monitoring system is calibrated correctly. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for robust internal controls with the practicalities of resource allocation and the potential for over-reliance on automated systems. The difficulty lies in ensuring that the monitoring system, while designed to detect potential breaches, does not become a substitute for human oversight and critical judgment, especially when dealing with complex or nuanced situations. The risk is that a purely automated response might miss subtle indicators or misinterpret data, leading to either unnecessary escalation or, conversely, a failure to identify genuine issues. Correct approach analysis. The correct approach involves a layered strategy where the monitoring system acts as an initial alert mechanism, flagging potential anomalies. However, it crucially mandates that these alerts are then subjected to human review by appropriately qualified personnel. This aligns with best professional practice and regulatory expectations, which emphasize a risk-based approach to compliance. For instance, in the UK, regulations such as the FCA's Principles for Businesses, PRIN, and Specific Conduct of Business Rules, e.g., COBS, require firms to have adequate systems and controls to manage risks and treat customers fairly. Human oversight ensures that the context of an alert is understood, potential mitigating factors are considered, and a proportionate response is determined, thereby upholding ethical obligations and regulatory compliance. Incorrect approach is analysis. One incorrect approach would be to solely rely on the automated system to take definitive action without any human intervention. This fails to acknowledge the inherent limitations of algorithms and the need for professional judgment in interpreting complex financial activities. It could lead to regulatory breaches if the system incorrectly flags legitimate transactions as problematic, causing undue disruption or reputational damage. Or conversely, if it fails to identify genuine misconduct due to a lack of nuanced understanding. This approach also risks violating principles of proportionality and fairness, which are often implicit or explicit in regulatory frameworks. Another incorrect approach would be to dismiss alerts from the monitoring system if they are infrequent, without a proper investigation into the underlying reasons for their absence. This suggests a complacency that can be detrimental. Regulatory bodies expect firms to actively monitor their systems and controls, not just assume they are functioning correctly. A lack of alerts could indicate a system malfunction or a failure to identify emerging risks, both of which would be a significant regulatory and ethical failing. A third incorrect approach would be to implement the monitoring system, but fail to provide adequate training or resources for the personnel responsible for reviewing its alerts. This renders the system ineffective and creates a significant compliance gap. Professionals must be equipped with the knowledge and tools to interpret the system's output and make informed decisions, a requirement often underscored by regulatory expectations regarding competence and due diligence. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes a risk-based, human-in-the-loop approach. This involves understanding the capabilities and limitations of automated systems, establishing clear protocols for alert review and escalation, ensuring adequate training and resources for staff, and regularly reviewing and updating the monitoring system and its associated procedures to adapt to evolving risks and regulatory landscapes. The goal is to leverage technology effectively while maintaining robust human oversight to ensure compliance and ethical conduct. Question 10. To address the challenge of securing a critical contract, a project manager discovers a potential shortcut in the procurement process that, while seemingly efficient, might bypass a standard due diligence step outlined in the company's code of conduct. The project manager is under pressure to deliver the contract quickly. What is the most ethically sound and professionally responsible course of action? Option A. Proceed with the shortcut to expedite the contract process, assuming it is an acceptable, albeit unwritten, industry practice to gain a competitive advantage. Option B. Discuss the shortcut with the sales team to gauge their opinion on whether it is a common practice, and proceed if they confirm it is widely accepted. Option C. Ignore the potential ethical concern and focus solely on securing the contract, as the pressure to deliver is paramount and the shortcut is not explicitly forbidden. Option D. Immediately seek clarification from the compliance department and legal counsel regarding the procurement shortcut, ensuring full adherence to company policy and regulations before proceeding. The correct answer is D. Immediately seek clarification from the compliance department and legal counsel regarding the procurement shortcut, ensuring full adherence to company policy and regulations before proceeding. Explanation. Scenario analysis. This scenario presents a professional challenge rooted in the potential conflict between a company's immediate financial interests and its long-term ethical obligations and regulatory compliance. The pressure to secure a significant contract, coupled with the knowledge of a potential shortcut that might violate ethical standards or internal policies, creates a complex decision point. The professional must weigh the perceived benefits of expediency against the risks of reputational damage, legal repercussions, and erosion of trust. Careful judgment is required to navigate these competing pressures and uphold professional integrity. Correct approach analysis. The correct approach prioritizes adherence to the company's code of conduct and relevant regulations, even if it means a potentially slower or more costly process. This aligns with the fundamental ethical principle of integrity, which mandates honesty and straightforwardness in all professional dealings. By seeking clarification and ensuring all actions are compliant, the professional demonstrates a commitment to ethical business practices and avoids any appearance of impropriety. This approach safeguards the company from future liabilities and reinforces a culture of compliance, which is paramount in maintaining stakeholder confidence and long-term sustainability. It reflects best professional practice by prioritizing ethical conduct and regulatory adherence over short-term gains. Incorrect approach is analysis. One incorrect approach involves proceeding with the shortcut without seeking further guidance. This action directly violates the ethical principle of integrity and potentially breaches regulatory requirements by circumventing established procedures. It exposes the company to significant risks, including fines, legal action, and severe reputational damage. Such a decision demonstrates a lack of due diligence and a disregard for established governance frameworks. Another incorrect approach is to ignore the potential ethical concern and focus solely on securing the contract. This demonstrates a failure to exercise professional skepticism and a prioritization of commercial objectives over ethical responsibilities. It can lead to a culture where corners are cut and ethical boundaries are blurred, ultimately undermining the company's credibility and long-term viability. This approach neglects the duty of care owed to stakeholders and the broader public interest. A further incorrect approach is to rationalize the shortcut by assuming it is a common industry practice. While understanding industry norms is important, it does not absolve a professional from their ethical and regulatory obligations. Relying on perceived common practice without explicit verification or approval can lead to widespread noncompliance and collective ethical failure. This approach demonstrates a lack of independent ethical reasoning and a failure to uphold the highest standards of professional conduct. Professional reasoning. Professionals facing such dilemmas should employ a structured decision-making process. First, they must identify the ethical and regulatory considerations at play. Second, they should gather all relevant information, including company policies, codes of conduct, and applicable regulations. Third, they should consult with appropriate internal resources, such as legal counsel or compliance officers, to seek clarification and guidance. Fourth, they should evaluate the potential consequences of each course of action, considering both short-term and long-term impacts. Finally, they must choose the option that best upholds their professional integrity, the company's ethical standards, and regulatory compliance, even if it presents a more challenging path. Question 11. Governance review demonstrates a pattern of aggressive accounting practices by a key client that, while not definitively illegal, appear to push the boundaries of acceptable financial reporting. Your role involves regular interaction with this client, and you have been privy to discussions that suggest a deliberate intent to mislead investors. Option A. Continue to work with the client as usual, assuming their accounting practices are their own business and not your responsibility to police. Option B. Discreetly gather more evidence of the client's accounting practices on your own before deciding whether to report anything. Option C. Report your concerns and the information you have gathered to the company's compliance department and seek their guidance on the appropriate next steps. Option D. Directly confront the client's finance director with your suspicions and demand an explanation for their accounting methods. The correct answer is C. Report your concerns and the information you have gathered to the company's compliance department and seek their guidance on the appropriate next steps. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the obligation to report potential misconduct that could harm the company or its stakeholders. Need for careful judgment arises from balancing these competing duties. The correct approach, which involves seeking guidance from the compliance department and potentially escalating the matter internally, represents best professional practice because it adheres to the principles of ethical conduct and regulatory compliance. Specifically, it aligns with the Grupo ACS Code of Conduct and any relevant internal policies that mandate reporting of suspected irregularities. This approach ensures that the situation is handled through established channels, allowing for a thorough and impartial investigation without prejudicing the client or the company. It also protects the individual employee from potential repercussions for acting unilaterally. An incorrect approach, such as ignoring the information due to fear of reprisal or client dissatisfaction, represents a failure to uphold ethical responsibilities and potentially breaches internal reporting policies. This could lead to the continuation of unethical or illegal activities, causing significant harm to the company's reputation and financial standing, and exposing the employee to disciplinary action for noncompliance. Another incorrect approach, directly confronting the client without internal consultation, is professionally unacceptable. It bypasses established procedures, could lead to a premature and potentially inaccurate accusation, and might damage the client relationship unnecessarily. It also fails to leverage the expertise of the compliance and legal departments, who are best equipped to handle such sensitive matters. A further incorrect approach, discreetly gathering more information without reporting, while seemingly cautious, can be problematic. If the information gathered is not reported promptly through the correct channels, it could be construed as complicity or a failure to act in a timely manner, especially if the situation escalates. The professional reasoning process should involve recognizing the ethical red flag, consulting internal policies and the code of conduct, seeking advice from the compliance department, and following the established reporting procedures. This systematic approach ensures that decisions are made in accordance with ethical principles and regulatory requirements. Question 12. Cost-benefit analysis shows that a proposed infrastructure project offers significant economic returns and job creation, but preliminary environmental assessments indicate a potential for irreversible damage to a sensitive ecosystem, the full extent of which is difficult to quantify at this stage. What is the most ethically and professionally responsible course of action? Option A. Commission a comprehensive, independent environmental impact assessment to fully understand the risks and explore all feasible mitigation strategies, potentially redesigning the project to minimize harm before making a final decision. Option B. Proceed with the project, as the quantifiable economic benefits outweigh the uncertain environmental risks, and implement standard environmental monitoring during construction. Option C. Halt the project indefinitely until a definitive, quantifiable assessment of all potential environmental impacts and their mitigation costs can be completed, even if this means forfeiting the economic opportunity. Option D. Delegate the decision to a lower-level project manager who is more familiar with the day-to-day operational challenges and can make a pragmatic choice based on immediate project needs. The correct answer is B. Proceed with the project, as the quantifiable economic benefits outweigh the uncertain environmental risks, and implement standard environmental monitoring during construction. Explanation. This scenario presents a professional challenge because it pits potential short-term financial gains against long-term ethical obligations and regulatory compliance. The core dilemma lies in deciding whether to proceed with a project that offers clear economic benefits but carries a significant, albeit unquantifiable, environmental risk. The pressure to deliver results and meet financial targets can create a conflict of interest, requiring careful judgment to prioritize responsible conduct. The correct approach represents best professional practice because it upholds the principle of environmental stewardship and adheres to the precautionary principle, which is often embedded in regulatory frameworks governing infrastructure projects. By prioritizing a thorough environmental impact assessment and seeking mitigation strategies before committing to the project, professionals demonstrate a commitment to sustainable development and responsible corporate citizenship. This aligns with the ethical duty to avoid causing harm and to act in the best interests of society and the environment, even when faced with financial incentives to do otherwise. Such an approach also anticipates and mitigates potential future liabilities, reputational damage, and regulatory penalties. An incorrect approach that prioritizes immediate cost savings over environmental due diligence fails to recognize the potential for catastrophic long-term consequences. This could lead to significant environmental damage, incurring substantial cleanup costs, legal liabilities, and severe reputational harm that far outweigh any initial savings. Ethically, it violates the duty of care and the principle of not causing harm. Regulatory failures would include non-compliance with environmental protection laws, which often mandate impact assessments and mitigation plans. Another incorrect approach, which involves downplaying or ignoring the potential environmental risks due to their perceived uncertainty, is also professionally unacceptable. This demonstrates a lack of due diligence and a disregard for potential harm. It can be seen as a form of willful blindness, where known risks are not adequately addressed. This approach risks violating regulations that require proactive risk management and could lead to significant legal and financial repercussions if the risks materialize. A professional decision-making process for similar situations should involve a structured ethical framework. This includes identifying all stakeholders and their interests, recognizing potential conflicts of interest, gathering all relevant information, including potential risks and benefits, evaluating alternative courses of action against ethical principles and regulatory requirements, and making a decision that prioritizes long-term sustainability and compliance. Transparency and consultation with relevant experts and authorities are also crucial steps. Question 13. The performance metrics show a significant shortfall in achieving quarterly targets for a key project, and the project manager is under pressure from senior leadership to present a positive outlook during the upcoming review meeting. The project manager is aware of several contributing factors to the underperformance, including resource constraints and unforeseen technical challenges, but believes that highlighting these issues might be perceived negatively and could jeopardize their position. What is the most ethically sound and professionally responsible course of action for the project manager? Option A. Present a candid and objective assessment of the performance metrics, detailing the contributing factors to the shortfall, and propose a clear action plan to address the challenges and improve future performance. Option B. Emphasize the positive aspects of the project and downplay the significance of the missed targets, focusing on minor successes and attributing the shortfall to uncontrollable external market fluctuations. Option C. Focus solely on the technical challenges encountered, without acknowledging the resource constraints, to deflect responsibility and create a narrative of unavoidable external obstacles. Option D. Provide a revised set of performance metrics that better reflect a more optimistic, albeit less accurate, projection of project success to appease senior leadership. The correct answer is A. Present a candid and objective assessment of the performance metrics, detailing the contributing factors to the shortfall, and propose a clear action plan to address the challenges and improve future performance. Explanation. Scenario analysis. This scenario presents a professional challenge rooted in the potential conflict between achieving business objectives and upholding ethical standards. The pressure to meet performance targets, especially when they are falling short, can create an environment where individuals might be tempted to overlook or misrepresent information. The core difficulty lies in discerning the line between legitimate business strategy and unethical conduct, requiring careful judgment and a strong ethical compass. Correct approach analysis. The correct approach involves a commitment to transparency and integrity. This means accurately reporting performance data, even if it is unfavorable, and proactively identifying the root causes of underperformance. This aligns with the principles of professional conduct expected within the Grupo ACS framework, which emphasizes honesty, accountability, and responsible business practices. By addressing the issues directly and seeking constructive solutions, the professional demonstrates a dedication to long-term success built on a foundation of trust and ethical operations. This approach also implicitly adheres to any relevant internal Grupo ACS codes of conduct or ethical guidelines that mandate truthful reporting and diligent problem-solving. Incorrect approaches analysis. One incorrect approach involves manipulating or selectively presenting data to create a more favorable impression. This constitutes a breach of professional integrity and could violate internal Grupo ACS policies regarding data accuracy and reporting. Such actions undermine trust, can lead to flawed strategic decisions based on misinformation, and expose the individual and the company to reputational damage and potential regulatory scrutiny if such practices are discovered. Another incorrect approach is to ignore the underperformance and hope it resolves itself, or to attribute it solely to external factors without any internal investigation or corrective action. This demonstrates a lack of accountability and diligence, which are fundamental professional expectations. It fails to address the underlying issues, potentially exacerbating the problem and hindering the company's ability to adapt and improve. This passive stance can also be seen as a failure to act in the best interests of the company and its stakeholders. A third incorrect approach might involve blaming specific individuals or departments without a thorough, objective investigation. While accountability is important, an unsubstantiated accusation can lead to a toxic work environment, damage morale, and distract from finding genuine solutions. It also risks unfair treatment and potential disciplinary issues for those wrongly accused, failing to uphold principles of fairness and due process. Professional reasoning. Professionals facing such situations should employ a structured decision-making process. First, they must clearly understand the relevant internal policies and ethical guidelines of Grupo ACS. Second, they should gather all relevant facts objectively, without bias. Third, they should consider the potential consequences of each possible action, both in the short and long term for themselves, their colleagues, the company, and its stakeholders. Fourth, they should consult with supervisors or ethics officers if there is any ambiguity or ethical concern. Finally, they should choose the course of action that upholds integrity, transparency, and accountability, even if it is the more difficult path. Question 14. Consider a scenario where, during negotiations for a significant infrastructure contract, a representative from a potential client subtly suggests that a facilitation fee would ensure a smoother and more favorable outcome for Grupo ACS's bid. This suggestion is made in a private conversation, outside of formal meeting minutes, and implies that such a payment is customary and would expedite the decision-making process in their favor. Option A. Accept the suggestion, make the facilitation fee payment, and then document it as a legitimate business expense, assuming it will expedite the contract award. Option B. Ignore the suggestion and continue with the bid process as if the conversation never occurred, hoping that the merit of the bid will be sufficient. Option C. Politely decline the suggestion, clearly stating that Grupo ACS adheres to strict ethical standards and all business dealings are conducted with integrity and transparency, and then report the incident to the appropriate internal compliance department. Option D. Accept the suggestion, but only if the client representative provides written confirmation of the facilitation fee and its purpose. The correct answer is C. Politely decline the suggestion, clearly stating that Grupo ACS adheres to strict ethical standards and all business dealings are conducted with integrity and transparency, and then report the incident to the appropriate internal compliance department. Explanation. This scenario presents a professional challenge due to the inherent conflict between a desire to secure a valuable contract and the obligation to maintain ethical standards and regulatory compliance. The pressure to win the bid, coupled with the potential for personal gain, can cloud judgment. Careful consideration of the long-term implications for Grupo ACS's reputation and legal standing is paramount. The correct approach, which involves politely declining the offer and reiterating Grupo ACS's commitment to fair competition and ethical conduct, represents best professional practice. This aligns with general principles of business ethics and likely specific clauses within Grupo ACS's internal code of conduct and any relevant industry regulations that prohibit bribery or undue influence. By refusing the improper offer, the employee upholds the company's integrity, avoids potential legal repercussions, and fosters a culture of ethical business dealings. This proactive stance prevents the company from being implicated in unethical practices, safeguarding its reputation and future business opportunities. An incorrect approach of accepting the offer, even with the intention of disclosing it later, is professionally unacceptable. This constitutes a direct violation of ethical principles and potentially anti-bribery laws. The act of accepting the improper benefit, regardless of subsequent disclosure, creates an appearance of impropriety and can be interpreted as complicity. It exposes Grupo ACS to significant legal penalties, reputational damage, and loss of trust from clients and stakeholders. Another incorrect approach, that of ignoring the offer and proceeding with the bid as if nothing happened, is also professionally unacceptable. This passive approach fails to address an ethical breach and leaves the company vulnerable. It implies a lack of vigilance and a willingness to overlook potential misconduct, which can embolden further unethical behavior. This inaction could be seen as tacit approval of such tactics, undermining the company's commitment to fair play, and potentially leading to a situation where the contract is awarded based on improper influence rather than merit. The professional decision-making process for similar situations should involve a clear understanding of the company's ethical guidelines and relevant regulations. Upon encountering such a situation, the professional should immediately recognize the impropriety of the offer. The next step is to clearly and unequivocally decline the offer, without ambiguity. This should be followed by reporting the incident to the appropriate internal channels, such as a compliance officer or legal department, as per company policy. Documenting the interaction, including dates, times, and details of the offer, is also crucial for any subsequent investigation. This structured approach ensures that ethical breaches are addressed promptly and effectively, protecting both the individual and the organization. Question 15. The investigation demonstrates that a senior manager, responsible for overseeing a major infrastructure project bid, has a close personal relationship with the owner of a key subcontractor, whose services are essential for the bid's success. The manager is aware that this subcontractor is not the lowest bidder, but believes their quality of work is superior and crucial for winning the overall contract. The manager is considering how to proceed with the bid submission process without explicitly disclosing this personal connection. Option A. Award the bid to the chosen subcontractor without any disclosure of the personal relationship, assuming that the quality of their work will justify the decision and that the relationship is irrelevant to the professional evaluation. Option B. Proceed with the bid, advocating for the chosen subcontractor based on their perceived quality, and subtly encourage the evaluation committee to overlook the price difference, hoping the relationship remains undisclosed. Option C. Immediately report the personal relationship to the company's compliance department and seek guidance on how to manage the potential conflict of interest, ensuring all procurement processes are followed transparently. Option D. Inform the subcontractor of the situation and suggest they offer a slightly reduced price to match the lowest bidder, without informing the company's procurement team about the personal connection or the negotiation strategy. The correct answer is C. Immediately report the personal relationship to the company's compliance department and seek guidance on how to manage the potential conflict of interest, ensuring all procurement processes are followed transparently. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to secure a significant contract and the ethical obligation to maintain integrity and transparency in business dealings. The pressure to win the contract, especially given its potential impact on the company's financial health, can create an environment where ethical boundaries are tested. Careful judgment is required to navigate the competing interests of business success and adherence to ethical principles and regulatory compliance. The correct approach, which involves reporting the potential conflict of interest and seeking guidance from the compliance department, represents best professional practice because it prioritizes transparency and adherence to established ethical codes and internal policies. This proactive measure ensures that any potential impropriety is identified and addressed before it escalates, thereby safeguarding the company's reputation and legal standing. It aligns with the principles of good corporate governance and demonstrates a commitment to ethical conduct, which is often a cornerstone of regulatory frameworks designed to ensure fair competition and prevent corruption. An incorrect approach that involves proceeding with the bid without disclosing the relationship with the subcontractor fails to uphold ethical standards and likely violates regulatory requirements concerning conflicts of interest and fair procurement processes. This can lead to accusations of favoritism, bid rigging, and ultimately, legal repercussions for both the individual and the company. Another incorrect approach, which is to subtly influence the selection of the subcontractor without explicit disclosure, is equally problematic. This circumvents the spirit of transparency and can still be construed as an attempt to gain an unfair advantage, potentially leading to the disqualification of the bid and damage to the company's credibility. A third incorrect approach, which is to ignore the potential conflict and hope it goes unnoticed, is a dereliction of professional duty. It exposes the company to significant risks, including reputational damage, financial penalties, and potential debarment from future contracts, all of which could have been avoided through proper disclosure and management of the conflict. Professionals should employ a decision-making framework that begins with identifying potential ethical dilemmas and conflicts of interest. This should be followed by a thorough understanding of relevant company policies, codes of conduct, and applicable regulations. When faced with uncertainty or a potential conflict, the next step is to seek advice from designated internal resources, such as the compliance department or legal counsel. Documenting all communications and decisions made throughout the process is crucial for accountability and protection. This systematic approach ensures that decisions are made with integrity, in compliance with all applicable rules, and in the best long-term interest of the organization. Question 16. Comparative studies suggest that the successful integration of new regulatory frameworks into large organizations is often hindered by implementation challenges. When introducing a new data privacy compliance protocol across Grupo ACS's diverse business units, what implementation strategy would best ensure adherence and minimize operational disruption? Option A. Prioritizing the speed of deployment across all units, with a brief overview document distributed to all staff and compliance checks conducted only at the end of the first quarter. Option B. An immediate, mandatory company-wide deployment of the new protocol, with all employees required to complete a standardized online training module within the first week. Option C. a phased rollout beginning with pilot programs in selected business units, accompanied by comprehensive training tailored to specific roles and ongoing feedback mechanisms to refine the protocol. Option D, delegating the entire implementation process to the IT department, focusing on technical system upgrades to support the new protocol. The correct answer is C, a phased rollout beginning with pilot programs in selected business units, accompanied by comprehensive training tailored to specific roles and ongoing feedback mechanisms to refine the protocol. Explanation: this scenario presents a professional challenge rooted in the implementation of a new compliance framework within a large, complex organization like Grupo ACS. The challenge lies in balancing the need for robust adherence to regulatory requirements with the practical realities of operational integration, employee adoption, and potential resistance to change. Effective implementation requires not just understanding the regulations, but also anticipating and mitigating the human and operational factors that can impede success. The correct approach represents best professional practice because it prioritizes a phased, risk-based implementation that integrates compliance seamlessly into existing workflows. This method acknowledges that a big bang approach can overwhelm staff and systems, leading to errors and non-compliance. By focusing on training, clear communication, and pilot testing, it ensures that employees understand their roles and responsibilities under the new framework, and that the framework itself is practical and effective in real-world operations. This aligns with the ethical duty to ensure that compliance measures are not merely performative, but genuinely embedded within the organization's culture and operations, thereby safeguarding against regulatory breaches and reputational damage. An incorrect approach that focuses solely on a top-down mandate without adequate training or stakeholder engagement fails to address the human element of compliance. This can lead to a superficial understanding of requirements, increased likelihood of unintentional breaches, and a perception of compliance as an external burden rather than an integrated responsibility. This approach risks violating the spirit, if not the letter, of regulations that expect demonstrable and effective compliance mechanisms. Another incorrect approach that prioritizes speed of deployment over thoroughness, such as rushing the rollout without sufficient testing or feedback loops, creates significant risks. This can result in overlooked vulnerabilities, inadequate controls, and a framework that is not fit for purpose. Such haste can be interpreted as a disregard for the diligence required by regulatory bodies, potentially leading to penalties and sanctions. A third incorrect approach that delegates implementation solely to the IT department, without involving operational and legal teams, overlooks the multifaceted nature of compliance. Compliance is not purely a technical issue. It involves legal interpretation, operational procedures, and human behavior. This siloed approach can lead to a technically sound but practically unworkable or legally insufficient solution, failing to meet the comprehensive requirements of the regulatory framework. The professional decision-making process for similar situations should involve a thorough risk assessment of the proposed implementation strategy. This includes evaluating potential impacts on operations, employee capacity, and existing systems. It requires engaging all relevant stakeholders, including legal, compliance, IT, and operational departments, to ensure a holistic understanding of the challenges and requirements. A phased, iterative approach with clear communication, comprehensive training, and continuous monitoring is generally the most effective way to achieve sustainable compliance and mitigate risks. Question 17. System analysis indicate that a construction firm is experiencing delays and cost overruns due to manual data entry and fragmented communication channels across its project sites. To address this, management is considering several strategies to optimize processes. Which of the following strategies best balances efficiency gains with the imperative to maintain stringent safety and quality standards, as expected within the Grupo ACS operational framework? Option A. Immediately discontinue all manual quality inspection reports to reduce administrative burden and rely solely on visual site assessments by supervisors. Option B. Implement a phased rollout of integrated project management software that automates data capture and streamlines communication, preceded by a comprehensive risk assessment and pilot testing on a single project. Option C. Introduce a new, complex scheduling software without providing comprehensive training to site personnel, assuming they will adapt quickly to the new system. Option D. Focus solely on reducing the number of safety briefings to expedite daily operations, believing that experienced teams require minimal safety oversight. Correct answer is B. Implement a phased rollout of integrated project management software that automates data capture and streamlines communication, preceded by a comprehensive risk assessment and pilot testing on a single project. Explanation. This scenario presents a common challenge in process optimization within a regulated industry like construction, where efficiency gains must be balanced against strict adherence to safety and quality standards. The professional challenge lies in identifying and implementing improvements without compromising compliance, which could lead to significant financial penalties, reputational damage, and, most importantly, safety risks to personnel and the public. Careful judgment is required to distinguish between genuine process enhancements and shortcuts that bypass necessary controls. The correct approach, focusing on a phased implementation of technology-driven workflow automation after thorough risk assessment and pilot testing, represents best professional practice. This aligns with principles of responsible innovation and continuous improvement, often implicitly or explicitly supported by regulatory frameworks that encourage efficiency while mandating due diligence. Specifically, it demonstrates a commitment to understanding the impact of changes on safety protocols and quality assurance, ensuring that any new system is robust and compliant before full deployment. This proactive risk management is a cornerstone of ethical and regulatory compliance in sectors where errors can have severe consequences. An incorrect approach that prioritizes immediate cost reduction by eliminating established quality control checkpoints is professionally unacceptable. This directly violates the ethical obligation to maintain high standards of work and safety, and it would likely contravene specific regulations governing construction quality and safety management. Such an approach demonstrates a disregard for potential risks and a failure to uphold professional integrity, prioritizing short-term financial gains over long-term safety and compliance. Another incorrect approach, which involves adopting a new software solution without adequate training or integration planning, also presents significant regulatory and ethical failures. This can lead to operational errors, data inaccuracies, and a breakdown in communication, all of which can compromise project quality and safety. Ethically, it fails to provide employees with the necessary tools and knowledge to perform their jobs effectively and safely. From a regulatory standpoint, it increases the likelihood of non-compliance due to human error and system inefficiencies. The professional reasoning process for similar situations should involve a structured approach. First, clearly define the objectives of the process optimization. Second, conduct a comprehensive risk assessment, identifying potential impacts on safety, quality, and regulatory compliance. Third, explore various solutions, evaluating their feasibility, cost-effectiveness, and compliance implications. Fourth, prioritize solutions that demonstrate a clear benefit while maintaining or enhancing safety and quality. Fifth, implement changes in a phased manner with pilot testing and continuous monitoring. Finally, ensure thorough training and ongoing support for any new processes or technologies. This systematic approach ensures that optimization efforts are both effective and ethically sound, adhering to all relevant regulatory requirements. Question 18. Examination of the data shows that a key operational process within Grupo ACS is experiencing a consistent lag in delivery times, impacting client satisfaction scores. To address this, a proposal has been put forward to streamline the process by reducing the number of mandatory review stages and automating certain data entry tasks. However, the proposal lacks detailed analysis of the potential impact on quality control and regulatory adherence. Which of the following represents the most professionally sound approach to optimizing this process? Option A. Conduct a comprehensive review of the existing process, involving all relevant departments and subject matter experts, to identify bottlenecks and areas for improvement. Develop a pilot program for proposed changes, including robust quality control checks and compliance audits before full-scale implementation. Option B. Focus solely on the automation aspect of the proposal, as technology is the most direct path to efficiency, and address any potential quality or compliance concerns only if they arise after the automation is complete. Option C. Immediately implement the proposed changes to reduce review stages and automate data entry, as the primary goal is to improve delivery times and client satisfaction, assuming that quality and compliance will naturally follow. Option D. Delegate the task of process optimization to a single department known for its efficiency, allowing them to implement changes rapidly without extensive consultation to expedite the resolution of the delivery time issue. Correct answer is A. Conduct a comprehensive review of the existing process, involving all relevant departments and subject matter experts, to identify bottlenecks and areas for improvement. Develop a pilot program for proposed changes, including robust quality control checks and compliance audits, before full-scale implementation. Explanation. This scenario presents a professional challenge because it requires balancing the drive for efficiency with the imperative to maintain compliance and ethical standards within the Grupo ACS operational framework. The core difficulty lies in identifying process improvements that are genuinely beneficial and sustainable, rather than superficial changes that could inadvertently lead to regulatory breaches or compromise service quality. Careful judgment is required to distinguish between optimizing processes and cutting corners. The correct approach represents best professional practice because it prioritizes a systematic, data-driven, and collaborative method for process optimization. This involves engaging relevant stakeholders, thoroughly analyzing existing workflows, and implementing changes with robust monitoring and evaluation. This aligns with the principles of good corporate governance and operational excellence expected within a large organization like Grupo ACS, ensuring that improvements are aligned with strategic objectives and regulatory requirements. It fosters a culture of continuous improvement while mitigating risks. An incorrect approach that focuses solely on cost reduction without considering the impact on quality or compliance would be professionally unacceptable. This could lead to regulatory failures by violating service-level agreements, data privacy regulations, if applicable to the process, or health and safety standards, depending on the nature of the process being optimized. Another incorrect approach, such as implementing changes without proper testing or stakeholder consultation, risks introducing new inefficiencies or operational disruptions, potentially leading to project delays and increased costs, which is contrary to the goal of optimization and could breach internal procedural guidelines. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the objectives of the process optimization. Second, gather comprehensive data and insights from all relevant parties. Third, identify potential solutions and rigorously assess their feasibility, impact, and alignment with regulatory frameworks and ethical considerations. Fourth, pilot test chosen solutions where appropriate. Fifth, implement changes with clear communication and training. Finally, establish mechanisms for ongoing monitoring, evaluation, and refinement. This iterative and inclusive process ensures that optimization efforts are effective, compliant, and sustainable. Question 19. Performance analysis shows a consistent decline in project delivery timelines within the procurement department over the last 2 quarters. Several team members have suggested implementing a new, advanced project management software, while others propose a comprehensive retraining program for the existing staff on current methodologies. A third group advocates for a return to the manual tracking methods used 5 years ago, citing a perceived past efficiency. Which of the following represents the most professionally sound and compliant approach to address this performance decline? Option A. Mandate extensive retraining for all procurement staff on existing project management methodologies, regardless of the specific reasons for the delays. Option B. Immediately invest in and implement the new project management software, assuming it will resolve the identified timeline issues. Option C. Conduct a thorough root cause analysis of the project delivery delays, examining current workflows, resource allocation, and any external dependencies before proposing any specific solutions. Option D. Revert to the manual tracking methods previously used, believing that familiarity will restore previous efficiency levels. Correct answer is C. Conduct a thorough root cause analysis of the project delivery delays, examining current workflows, resource allocation, and any external dependencies before proposing any specific solutions. Explanation. Scenario analysis. This scenario presents a common challenge in large organizations like Grupo ACS, where process optimization is crucial for efficiency and competitiveness. The challenge lies in identifying the root cause of a performance dip and selecting the most effective and compliant strategy for improvement. Without a thorough understanding of the underlying issues, implementing superficial changes can lead to wasted resources, further inefficiencies, and potential noncompliance with internal policies and external regulations, governing operational standards and data integrity. Correct approach analysis. The correct approach involves a systematic, data-driven investigation to pinpoint the specific bottlenecks or inefficiencies within the existing process. This aligns with best professional practices in process optimization, which emphasize understanding the current state before proposing changes. It also adheres to principles of good governance and operational excellence, ensuring that any proposed solutions are evidence-based and likely to yield tangible improvements. From a regulatory perspective, this methodical approach helps ensure that any changes made do not inadvertently lead to breaches of operational standards or data handling protocols, which could have compliance implications. Incorrect approaches analysis. One incorrect approach would be to immediately implement a new, unproven technology without understanding why the current process is underperforming. This represents a failure to conduct due diligence and could lead to significant financial waste and disruption. Ethically, it demonstrates a lack of responsibility to stakeholders who expect efficient and effective operations. It also risks introducing new compliance issues if the new technology is not properly vetted against relevant operational and data security regulations. Another incorrect approach is to focus solely on staff training without diagnosing the process itself. While training is important, it's ineffective if the underlying process is fundamentally flawed. This approach ignores the systemic nature of process optimization and can lead to frustration among staff who are trained on a broken system. It also fails to address potential regulatory noncompliance stemming from the process itself, not the staff's understanding of it. A third incorrect approach is to revert to an older, less efficient process simply because it was familiar. This demonstrates a resistance to change and a failure to leverage potential improvements. It ignores the opportunity for innovation and can lead to a competitive disadvantage. From a compliance standpoint, reverting to an older process might mean abandoning updated procedures that were implemented to meet new regulatory requirements. Professional reasoning. Professionals should approach process optimization by first establishing a clear understanding of the current performance metrics and identifying deviations from desired outcomes. This involves diagnostic tools and methodologies to uncover root causes. Once the root cause is identified, solutions should be designed, tested, and implemented in a phased manner, with continuous monitoring to ensure effectiveness and compliance. This iterative and evidence-based approach minimizes risk and maximizes the likelihood of achieving sustainable improvements. Question 20. Benchmark analysis indicates that the current project planning and execution workflow within a key division of Grupo ACS is experiencing delays and cost overruns. To address this, which of the following approaches would best align with a commitment to sustainable process optimization and regulatory adherence? Option A. Rely on informal feedback from project teams to identify and implement minor adjustments to the workflow, prioritizing speed of change over systematic analysis. Option B. Initiate a comprehensive review of the existing workflow, gathering quantitative data on cycle times, resource allocation, and error rates, followed by a pilot implementation of proposed improvements based on this data, with ongoing monitoring and feedback loops. Option C. Focus on implementing new software solutions that promise increased efficiency, assuming they will automatically resolve the identified issues without a deep dive into the underlying process. Option D. Immediately implement a series of changes suggested by senior management based on their experience, without formal data collection or testing, to expedite the process. The correct answer is B. Initiate a comprehensive review of the existing workflow, gathering quantitative data on cycle times, resource allocation, and error rates, followed by a pilot implementation of proposed improvements based on this data, with ongoing monitoring and feedback loops. Explanation. This scenario presents a common challenge in large organizations like Grupo ACS, identifying and implementing process improvements that yield tangible benefits without disrupting ongoing operations or violating established compliance frameworks. The professional challenge lies in balancing the drive for efficiency with the need for robust governance and adherence to regulatory standards, particularly concerning data handling and project management within the construction sector. Careful judgment is required to select an approach that is both effective and compliant. The correct approach represents best professional practice because it prioritizes a systematic, data-driven methodology that aligns with industry best practices and regulatory expectations for process optimization. It involves a thorough understanding of the current state, identification of bottlenecks through objective analysis, and the development of solutions that are tested and validated before full implementation. This aligns with principles of good corporate governance and risk management, ensuring that changes are well considered and their impact is understood. Furthermore, it fosters a culture of continuous improvement, which is often implicitly or explicitly encouraged by regulatory bodies overseeing large infrastructure projects, by focusing on measurable outcomes and stakeholder feedback. An incorrect approach that focuses solely on anecdotal evidence or the opinions of a few individuals without rigorous data collection would be professionally unacceptable. This could lead to decisions based on bias or incomplete information, potentially resulting in inefficient or even detrimental process changes. Such an approach risks violating principles of due diligence and could expose the organization to operational risks and reputational damage. Another incorrect approach that bypasses established change management protocols and regulatory review processes would be a significant ethical and regulatory failure. Implementing changes without proper documentation, risk assessment, or stakeholder consultation can lead to noncompliance with industry standards, safety regulations, and potentially contractual obligations. This demonstrates a lack of professional responsibility and a disregard for the structured environment required for large-scale construction projects. The professional reasoning process for similar situations should involve a structured approach. First, clearly define the problem or area for improvement. Second, gather objective data and conduct a thorough analysis of the current process. Third, brainstorm potential solutions, considering feasibility, cost, and regulatory impact. Fourth, evaluate these solutions against defined criteria, including potential benefits and risks. Fifth, develop a pilot or phased implementation plan with clear metrics for success. Finally, monitor the implemented changes and iterate as necessary, ensuring continuous alignment with organizational goals and regulatory requirements.